Hello and welcome to Money Life News and Views. I'm Devashish Basu. In financial year 2021, almost 10.7 million new demat accounts for the stock market trading were opened by Indian investors. In contrast, there was such a huge jump that in contrast, just 4 million were opened each of the 2 years before. But the action is not limited just to the stock market alone. In fact, many unregulated trading platforms, especially in foreign currencies, are thriving parallelly. Since March 2020 lockdown, there has been an explosion in a very particular kinds of trading in those. These are called binary options and contracts for differences, CFD. These are terms that most of you haven't heard, especially if you're not exposed to such trading in the international markets. These are illegal, but they are being openly advertised and targeted, especially at Hindi-speaking people in some of these portals. These platforms allow trading in currencies and international stock indices and commodities, but the orders are not routed through the Indian exchanges like the National Stock Exchange or the Bombay Stock Exchange. Now, much like illegal dabba trading, that used to happen and still happens in Ahmedabad, Surat and Rajkot and all of those areas, the platform itself is the counterparty, which means it's not that two people, you and I, are coming and trading against each other in the platform as would happen in NSE or BSE. You are trading against the portal, you are trading against the platform itself. This means that any money lost by the customer automatically means gains for the platform. And these platforms offer a leverage of up to 1,000 times. For 1 rupee invested or deposited, you can trade up to 1,000 rupees, which means a customer is bound to lose a lot of money over a period of time. Imagine, it's a huge leverage and you're trading against the platform. Obviously, the platform knows what you're doing and is able to make sure that you don't make money. And because of the leverage, a small price movement is enough to wipe out your entire deposits and put you out of kilter. The platforms are heavily advertised on YouTube, using all the tricks of the digital trade, such as referrals, testimonials, affiliate programs, and sponsored posts. They flaunt dubious global awards, claim membership of shady self-regulatory bodies which nobody has even heard of, which is like Financial Commission or so on, or something like that. They offer inducements such as free margin with bonus and stuff like that, which has actually no meaning. They offer fancy cars for super traders and ease of making profits, all to entice and ensnare customers. They've also hired top Indian cricketers for endorsements, and one of them has actually even sponsored an IPL team. Now, the question is, if they are all openly advertised, they must be legal, right? But they're not. Foreign exchange trading is regulated by the Reserve Bank of India, which prohibits trading with a foreign broker using a foreign bank account and trading in anything other than 4 pairs of currency, which is rupee dollar, rupee yen, rupee pound, and rupee euro. Trading can only be done through an Indian broker based and licensed in India, and usually this happens in MCX-SX and NSE. It is illegal to use an online portal to carry out transactions offshore. These portals are not members of Indian exchanges where foreign exchange trading takes place, as I just mentioned, and they are not registered intermediaries under SEBI or RBI. SEBI is actually rules the trading. The RBI creates the framework and decides on what can be traded in. According to my source, clients place a margin of between 0.1% to 1% of the trade value to enter positions that are marked to market every day, and they do not have an expiry date. He says, since these platforms offer derivatives trading on currencies and international securities and have Indian bank accounts, they can collect funds, and so they are essentially operating an illegal brokerage and exchange platform, and still they are advertising openly. Surprisingly, neither SEBI nor RBI has stirred itself to ban these platforms, which are nothing other than digital dabba, as I call it. They are dabba trading in a digital form. My source says until last year, you could use these accounts only to use international credit cards and for payments, but many of them now accept funds via RTGS and NEFT, meaning that they have set up Indian entities as well. This mode of payment seems to violate RBI's rules, as trading in foreign exchange other than 4 pairs, which was mentioned earlier, is not permitted. RBI can easily shut them down if it has noticed them and if it wants to. Now, SEBI too can act, since the platforms illegally permit trading in international stock indices and commodities. They also offer to trade, as I mentioned, in contracts for differences, which is an agreement to pay or receive the difference in the opening and closing price of the financial product. So you don't put up money for buying a security and selling a security, you just pay for the difference between opening and selling price. This is it's a derivative kind of instrument and not legal in India. A CFD trader never owns the asset, he just pays for the difference or gets the difference. A particular type of CFD is called binary options, where the payout depends entirely on the outcome of a yes-no proposition, such as whether the price of a particular asset that underlies the binary option will rise or fall above a specified amount. All this is illegal. I understand that SEBI is even fully aware of what's going on, but has done nothing despite its draconian powers of search and seizure. Of course, instead of going after those offering illegal trading, SEBI has been far more determined to make life more difficult for people like you and me, and also the intermediaries. The parent companies of all these platforms are located in shady tax jurisdictions like Malta or the Caribbean islands and Belize, and they have become a global menace. It's not just in India. The Securities and Exchange Commission has put out a 5-page document called Binary Options Fraud. You can check it out in the SEC website, which concludes as follows. Remember, much of the binary options market operates through internet-based trading platforms, exactly what's happening in India, that are not necessarily complying with the applicable US regulatory requirements and may be engaging in illegal activity, exactly the same as in India. SEC, unlike SEB though, is not sitting on its hands. On 16th April 2021, that's this year, it charged Israeli-based Spot Tech House Limited and 2 of its former top executives with deceiving US investors by more than $100 million. That's the kind of fraud that's going on over there, through fraudulent and unregistered online sales of binary options. Now, the scale of operations of digital dabbas in India is now huge. It's all reaching those levels, I guess, and which is obvious because the big advertising spends all over YouTube and also their cricket sponsorships now. Some of the Indian platforms have become so brazen that they have set up registered offices in India and, as mentioned earlier, are accepting Indian currency payments. If SEBI and RBI remain quiet about this brazenly illegal activity, will someone, at least in the Finance Ministry or Niti Aayog, at least take a close look? I hope you liked this, and if you did, please do subscribe. Thanks for watching.